Welcome everyone to BDO's webinar focused on professional service firms. My name is Anna Gerald and I am the partner leading our professional services tax team in the UK. We run 6 webinars a year for professional service firms on tax matters, dealing with a mixture of topics from international tax to domestic issues, updating those in relation to what's currently in place and what's coming down the road. This is our first webinar since our merger with Moore Stephens, making us the 5th largest firm in the UK. And for those of you who don't already know, BDO is also a global accounting network with over $9 billion in revenues, providing auditing, accounting and taxation services in 162 countries with over 80,000 people. I'm pleased to welcome our speakers today, who are Rebecca Chen and Grace Wu, both of who are directors in our Shanghai, China office, dealing with expat tax matters and professional service firms between them. You can ask questions during the webinar, and please use the Q&A feature, which is in the top right-hand corner of your screen, and we'll address as many of the questions as we can at the end of the webinar or after the webinar if time doesn't permit. There is a slight delay on the line, so please bear with us, but we will finish within the hour. I'm now going to hand over to Rebecca.
Hello? Hello. Hello, good morning, everyone. It's Grace from BDO China speaking, and today I and Rebecca will give you some introductions about the China tax laws from both the individual income tax and the corporate income tax levels. First of all, I will give you some key insights for the corporate income tax. Okay, please refer to the page 5 for the structure of the option. We know that most of the audience are professional service firms and the law firms and for most of the service companies. And if you would like to have to do some investment in China, there are several kinds of structures you can consider, which includes the general partnership, LLP, LLC, and representative office in China, because all these companies have a light assets comparing with some manufacturing companies. So these 4 types of firms are most likely to be seen in today's China market. And if you would like to set up a law firm in China, you can only go to the representative office in China. Okay. Regarding the tax part, you can see that on page 6, we have listed the 4 main kinds of a corporate tax in today's service companies. First of all, the most important and the most common one is the enterprise income tax, which we also call corporate income tax. In today's China, generally there are 3 tax rates for most of the service companies, which includes 5%, 10%, and 25%. Depends on the annual profit level. Normally, when a company have a quite big business, they will have the 25% on their profit to subject to the enterprise income tax. And you know, nowadays we have a quite good policies for some new investors or some foreign investor companies. For example, like last year, 2018, the China Tax Bureau has allowed some new investors or some foreign investors, they could have the fixed asset purchase to be go to their cost in one time rather than being capitalized, which could save quite a lot of money for the taxpayers. And also for the old investors, if they have some profit on their accounting book and they do not repatriate the dividend to their mother company, they will have some reinvested in China. Then they could enjoy the deferred income tax payment under the current China tax region. Yeah, it's quite something about the corporate income tax. And let's refer to the value-added tax. It's the most important indirect tax under the current China tax regime. And normally, for most of the service companies, the tax rate is 6%. But for some, like the small-scale taxpayer, they could have 3% for their VAT rates. I think the most of the revenue from the current State Tax Bureau, they are originated from the VAT in China. So it's quite important, no matter for the company or from the tax bureau. So there are a lot of things to do for the VAT. Firstly, just several days ago, like just 1 week ago or something, the China Tax Bureau has issued some important circulars regarding the VAT reform. Firstly, we know there are a further tax rate reduction. The standard for goods sold in China used to be 17% for many years. Now it's reduced to 16%. And this 6% maybe will have further reduction this year. We are also waiting for the Tax Bureau's feedback for this topic. And also, there will be a very special things in China. It's about invoice. In Chinese, we call it fapiao. It's very special in China, comparing with some other countries. Most of the countries, they will have some like only a letter size paper. They were used to be an invoice. But in China, we have special invoice which is issued by the State Tax Bureau. And it used to be very complicated for the invoice procedure. Now the China Tax Bureau has simplified the whole procedure, which would be a good news for the taxpayer. And also, we know most of the countries, they will have zero tax rate for the export VAT. And the whole procedure will be very complicated if we want to apply for the VAT refund for the export service or goods. And nowadays, the whole procedure will be very simple compared to the old rulings. Yeah, there are a lot of things to share, and maybe we can talk about it later. Okay, and for the third part, it's the local levies. That part is collected based on the VAT we paid for each taxpayer. It varies from different locations. Almost like generally, it will be 10% for the VAT we pay. It will not be so much, and this is not a very important tax for our most companies. And the other one is the individual income tax. The rate ranges from 3% to 45% on the employment income. Rebecca will introduce this part to you later. Okay, that's all about the partnership companies, representative office, main tax for this kind of companies. And for the partners, we know that for the Chinese nationals, for the Chinese residents, the income is taxed on worldwide perspective, which means that if you're a Chinese people, your worldwide income should be subject to the China individual income tax. And for the foreign nations, it depends on the consecutive years you live in China. It's 6 years. What means that if you resident in China for less than 6 consecutive years, you were taxed as a China source income. And otherwise, if you live here in China for more than 6 consecutive years, your whole income, your worldwide income, will be subject to the China tax. Okay. Okay, let's move to the second topic. It's about the issues of seconding staff into China. And I will leave this part to Rebecca, and she will give you more details about the seconding staff into China.
Hi, good morning, everyone. This is Rebecca from BDO China, who is taking care of the expatriate-related tax matters here. Regarding the seconding issues related to the foreign staff or Chinese national staff, in order to operate the process, the business in China, we would like to draw your attention about the whole procedure. Actually, it is quite a complicated process from the home country to China, because we have to assess the business actual requirement and also the personal's actual needs. And also, after we determine the actual needs and the related period in China, then we can determine what kind of the assignment types that we can offer to the individual. And after that, generally, we have listed all of the very common secondment types in the slides. You can see the first one is the business travelers. This is generally offered to the business travelers who need to travel to China for a periodically period. Generally, the total period will less than 6 months. So if the individual falling into this category, then maybe they can try to set up the assignment type as the business traveler. And the second one is the long-term or short-term assignment. So regarding this part, actually the individual will remain their employment relationship with the home country and only come to work in China on assignment basis. So in this regard, they can conclude the short-term or long-term assignment with the home country, the host country, so that this will not affect their employment relationship with home country. But the long-term and short-term type is only depends on the duration that they need to stay in China. And the last one is the permanent transfer. So regarding this type, generally the individual will cease their employment relationship with home country and then conclude a new employment relationship with the host country directly. So if regarding in this step, if the individual and the company decides which type they should apply for the individual, then we can go to the second step, which is that we need to determine what kind of visa that should the company apply for the individual in order for them to work in China legally. So generally, there are 3 main types, which is the business visa, the work permit, and the residence permit. So if the company, if the individual come to work in China as the business traveler, so in practice, the company can apply the business visa for the individual so that they can travel to China and go back to the home country on a time-on-time basis and within the limited period, which is generally around 3 months or 6 months. So that is to say, after the 6 months or 3 months period, the business visa will be expired. So if the individual have to come to China for another period, then the individual has to apply for a new business visa. And the work permit is generally issued for those individuals who work in China on long-term or short-term assignment or permanent transfer basis, so that they can apply for maybe around 1 year work permit. So within this period, the individual can travel, can enter China and exit China with no limited times or period, so that they can work in China legally. And after they obtain such work permit, they have also to apply the residence permit in order for them to live and reside in China. So this is the most main general business type, the visa types for foreign individuals who come to work in China. And also because if the individual's family members should need also to accompany the individual to live in China, so maybe they have to apply another type of the visa, so for their family members to reside in China. And after the individual applying appropriate visa and enter China, then we will take into consideration about their compensation structure as well as the payroll arrangement, whether the company or the individual still would like to remain on the home payroll and paid outside China, or in order to bear their general cost, living costs in China, or they have to pay part of their salaries in China. So we need to consider about this, all of these factors. After we can decide what should be what is the compensation structure for them. And after all of the payroll arrangement is fixed, we need to further assess what the individual's China individual income tax position. So generally, for the business travelers, generally their China tax liabilities is determined by their actual working days in China. So which means that only their China working period related income will be subject to China tax. And for those long-term and short-term assignment expatriates, as well as the permanent transfer individuals who is considered as a local hired individual in China, their full portion of their salary income will be subject to China individual income tax. However, the final tax position is determined on the individual's actual situation. So in order to fully comply with the China individual income tax law, we would suggest that the company and the individual to make a detailed analysis about the company, the individual's assignment type, as well as the visa type, and also the durations, and as well as the compensation recharge status, so that we can further make a final decision regarding their tax filing position in China. Yeah. And also, in China, we also have some special requirements for foreign individuals to enroll China Social Security schemes. However, in practice, the implementation varies from location to location, which depends on the local government's own discretion. For example, if the individual's actual working location is in Shanghai, at current stage, it is still a voluntary requirement for the foreign individuals to participate into the China Social Security scheme. However, if the individual is working in Beijing, so in Beijing, it is a mandatory requirement for them to enroll China Social Security schemes. So regarding this part, we would also suggest that you or the individual to further confirm with the local government in order to avoid any non-compliance risk from the China Social Security perspective. And once the last part is in some country, in some locations, we also have a minimum salary requirement, which means that for all of the individuals work in China, the company have to pay them with a minimum salary income, so that they can fully comply with the China level laws and some related regulations. So once the company considers to second staff to China, they have also to consider about this fact. So otherwise, there may be some non-compliance risk raised for both the company and the individual, because the government, at current stage, the government will issue so many tax audit as well as some Social Security audit to both the individual and the company to check whether they have any non-compliance behaviors, such as the tax evasion or other cases. So that because we have adopted a full page of the upgrade tax filing system, as well as the Social Security has already been administered by the Chinese tax government, so that they will have a very big picture about each company as well as the individual's information, and any non-compliance behaviors will be easily detected by them. So regarding from this part, we would suggest that the company and the individual to take all of the above, the aforementioned factors before seconding a staff, the individuals to work in China, so that they can fully comply with the relevant China tax regulations, the Social Security regulations, as well as the labor laws and the related regulations. Yeah. And also, just for information, that starting from January 1st, 2019, this year, the China tax government has issued the updated individual income tax law as well as relevant regulations. So we will give you some more detailed updates regarding the individual income tax in China that we currently adopted in the next section. We will include this we will discuss with you later.
Okay, let's move to the next part. Issues around the professional service operating in China. As we all know, if our service companies select the most appropriate investment approach in China is very important. But however, from the current tax regime, we know that the total tax burden for the service company will not be so high, no matter from the VAT perspective or from EIT perspective, especially for some investors, the new investors in China. They will have very good tax policies from the State Tax Bureau of China. However, we also need to consider if we if we would like to exit from the current investment vehicle, or we just leave China to repatriate the cash dividend or some profits back to UK, what kind of things we will meet under the current practice, China practice. And firstly, you know that China is a country with quite a strict forex control, which means that each payment going in and out of China will be controlled by the forex administration of China. So from this point of view, we have to provide the supporting documents if we would like to get money back from China to UK. This will be a very, very tricky and important topic. We know that the China and UK have signed the double tax treaty many years ago, and there will be some updated version recently. And we just need to let you know that if you would like to pay the dividend out from China, or you just get the final cash back to the UK, we have to make the registration with the Tax Bureau before we get the money out. So firstly, we need to finish the tax procedure. For example, for our taxpayers, we need to see whether we have some preferential tax rates according to the most updated tax treaty between China and UK to see normally the tax rate is about 10%, but whether we could see that if there are any possibility we could apply for some good tax rates. And also, we know that most of the service company, in most cases, we will have some supporting or some service providers from overseas. They come to China to provide services to the Chinese companies. And under this situation, we will pay the service fee out also to the overseas companies. And although the nature of these payments seems similar because they are all non-trade related, but it's under the different items of the China Tax Bureau. So we have to see that whether we can enjoy some good tax rates. For example, for the royalty fee, you may apply for 7% rather than 10% under some specific conditions. That's another thing our taxpayer needs to consider. And another thing I need to say that not every company, they will do the liquidation or the registration with the China authority. Sometimes they will transfer their shares or just to sell the whole partnership to the third party in order to go out. Under this situation, the China Tax Bureau has very complicated laws regarding the capital gain we have obtained in China. So we should say that our taxpayer will have to make sure whether the current situation could apply for some the good policies, and whether we need to pay tax in China in order to reduce the potential risks, as well as reduce our the tax burden. In one word, we think that nowadays the Tax Bureau, they leave more space for the taxpayer. For example, the taxpayer may have more deciding rights for many important things compared to the previous approaches. However, the risks under this situation may also be transferred to the taxpayer because, you know, in the old days, there are a lot of pre-approval procedure, which means that if you get the approval from the China Tax Bureau, for example, you pay dividend out or you pay the royalty fee out, you get the approval from the Tax Bureau, and you will never be challenged or be tax audited afterwards. But however, in these days, this right has passed to the taxpayer. You may try or you may find a way to reduce the tax for the current days, but the Tax Bureau will have a lot of follow-up management, which means maybe 1 year or 2 years later, they will have different tax audits under different Tax Bureau levels. Under this situation, we should say that our taxpayers need to spend more time beforehand for each transactions. We have to know, we have to obtain some good tax policies in order to reduce our potential risks. Okay, this is part for the non-trade payments. Let's move to the next part. In the following time, we want to give you recent PRC tax updates. Firstly, as Rebecca has said, from this year, on January 1st 2019, we have a very big update for the PRC individual income tax laws, which has, I think, impacted a lot of people, especially for these law firms or some partnerships. And if you have interested, maybe we could say something about this one later, because it has more impact for most of the people. And also, as I have mentioned, there will be preferential reduction policies for different types of the tax. For example, we have the VAT tax rate reduction, and also, you know, the China Tax Bureau has collected consumption tax only on goods, but this year the services for also some high-level services will also be subject to the consumption tax, which may be also related to many of the service industries. And also, the tax registration procedure has been simplified according to the circulars announced currently, and the application and approval process will be shortened. But as I have said, every coin has two sides. You will enjoy this good policies, but at the same time, risks has also been passed to the taxpayers. So what I need to say that before we enjoy all these good things, we have to get prepared fully in advance in order to avoid some unexpected tax audits happen. Okay, that's all about the topics today we need to share, and let's move to the Q&A part. Do you have any questions? Yes.
Yeah, thank you both. There are a few questions actually. So just picking up on one in relation to the expatriate tax regime regarding business travellers. You mentioned that the regime in relation to business travellers and the time that you need to be in China to qualify being less than 6 months. Can we just clarify whether that was 6 months per year, or does it have to be consecutive months, or is it just looking at it over a period of time and what it overall looks like in relation to the 6 months?
Okay, thanks for your question. So actually, as I just mentioned, for business travelers, generally they will apply business visa because the period that the business visa are valid is around 3 or 6 months. So generally, the 6 months is not a consecutive period, but maybe just a cumulative period within 1 year. So if the individual fall into this category, then they can apply business visa and work in China as a business travelers.
Understand. Okay, thank you. And also in relation to bringing staff to China, so seconding them from an overseas entity, where there isn't a local Chinese entity in existence, can you tell us a little bit around the permanent establishment risk that might exist of people coming into China and operating in China for the overseas entity?
Yeah, for those and this situation, if the individual is come to work in the Chinese entity as a permanent transfer individual, so generally we will call it as local hired foreign individuals. So in this if this is the case, they are all of their compensation income that they receive from the Chinese entity will be subject to China tax. And if they reside in China for more than 6 consecutive years, then their worldwide income not only include the employment income, but also if they have any personal income outside China will also be subject to China individual income tax. So from this perspective, we would suggest that the foreign individual to keep tracking of their present status in China in order to avoid their worldwide income to be taxed in China. Because as we just introduced, the China individual income tax is ranging from 3% to 45%. So the tax rate is very higher than than other countries. So from this perspective, we would suggest that the company to take into consideration about this special situation in China. And also in China, currently the tax authority will also have a very strict control about the permanent establishment status in China. Even though the individuals come to work in China with with no legal entities in China, but it depends on their actual working activities as well as the durations, and also whether how the tax treaties conclude between China and the overseas country, so that they will refer to all of these factors to assess whether the permanent establishment is existed in China. If this is the case, the tax authority will also demand the overseas entity to pay the corporate income tax, the value-added tax, as well as the local levies and the individual income tax in China.
Thank you. And just looking at the commercial environment, so where people are looking to invest in companies in China or set up a structure in China to operate there, what's the investment environment like at the moment?
We know that nowadays a lot of foreign companies come to their big cities in China, like in Shanghai or some like Beijing, and they have a quite good policies. We think that firstly, the good policies refers to the tax policy, because that's the money you need to pay to the government firstly. We know that for the small-scale taxpayer from VAT perspective, the tax rate is 6%, and also you can get the input VAT credit. If you don't apply for the small-scale taxpayer, then you can get this input VAT credit to the output VAT. And also from the corporate income tax perspective, for the newly opened company, if the total income would be less than like 1 million RMB, the EIT rate would be very low, like only 5%. And if you're more than 1 million and less than 3 million, and you will be 10%, comparing the normal 25%. I could say that it is a very good news to the new opening companies, comparing to our old policies and comparing to a lot of big countries, big cities. They have a quite high corporate income tax for those companies. And also, as I have said, the whole procedure is quite good because you don't need to go to a lot of authorities to do some registration. And you could finish a lot of steps maybe in one area, in one authority, and then could save you time. And then also, also could save you money because maybe you will not need to involve a lot of agencies to do different things.
Okay, no, that's helpful. Thank you. And if you've got a location, say something set up in Beijing, as you've mentioned, and something set up in Shanghai, do both sort of the local authorities in each of those regimes consider the situation in another city, or is it very much looked at individually by each of the cities themselves in terms of tax matters?
I think the whole environment for the big city is good. That's the reason why we say that, because no matter from the personnel perspective, we see that if you do some registration, do some pre-operational work with these authorities, we could see that the quality and the service quality for these authorities will be better than maybe some small cities. comparing to the older days, because we have there will be more control on the service qualities by the China authorities, and also we should say that the whole commercial environment for these big cities is good. We can see that a lot of, especially for these service companies, we have a lot of very big, famous law firms, accounting firms in Shanghai, and this environment is really good for the new established company, because you will have maybe more clients, and I think most of the headquarters of the multinational companies are based in either Shanghai or Beijing. That will offer more business opportunities for the new investors. So that's the reason I say that these two cities may be better than some other places.
Yeah, no, that's helpful. Thank you. And in relation to, as you said, some multinationals set up in perhaps both cities, and may end up having a profitable activity in one city, and perhaps in a startup regime, or perhaps less profitable, or maybe making losses in another city. Is it possible to offset the loss in one city against the profit of another one, or are we getting into too much detail here?
You mean the profits? For example, if you have a current company in Shanghai and get the profit, and you want to do investment in another city, then you mean the total? Is there any good policies, right?
Yes. So you might make a profit in one city, and you might start making a loss in another city, and overall.
Yes.
You may not be making any profit at all. In that case, can you offset the loss and the profit?
Currently, I think from the current tax regime, it's not possible to offset these two. Comparing to some, like I know maybe in Germany, then they are a tax group concept, but in China it's separate because we have different tax bureaus and they are separate. Maybe from the state tax bureau level they're the same, but they are quite different. Yeah, it's quite special in China, but it's maybe they are separate.
Yeah, no, okay, thank you. That was of particular interest to one of our the questions that have been raised. And maybe finally then, as a final question, you talked about the reform that is going through at the moment in relation to foreign working and living in China. But can you give us a little bit more flavour around the individual income tax reform?
Okay. So I think the first thing I want to introduce is about the definition about China tax residents for foreign nationals. In the past, for foreign nationals who work in China, if they reside in China for 1 full year. So the 1 full year mentioned here is if in a calendar year they do not outside China for either more than 30 days consecutively or 90 days cumulatively, they will be treated that they have present in China for 1 full year. However, according to the updated China individual income tax law, the threshold is updated to 183 days, which is inconsistent with the most tax treaties that China concludes with other countries. So at current situation, if for foreign nationals who reside in China for more than 183 days, so they will be treated that as a China tax residents in that calendar year. So this is the first update, and also as we just mentioned, for foreign nationals who reside in China for more than 6 full consecutive years, they will be subject to China individual income tax on their worldwide income. In the past, the threshold is 5 years. So this is also a good news for foreign nationals who work in China. They can get a long period to avoid their worldwide income to tax in China. And also, for those individuals whose income falling into the tax rate ranging from 10% to 25%, they can enjoy a lower tax rate comparing with the previous tax laws. Because this is the first time that we have introduced there's some additional itemized deductions for individuals who can enjoy. For example, the children education, the home loan mortgage, the housing rental expenses, as well as some continued education expenses for the individuals, so that they can deduct those expenses before their taxable income. So after that, in this regard, they can enjoy a lower tax rate, and which can help them to ease their tax burdens in China. And also for foreign nationals, they can also enjoy for some non-taxable benefit, such as the home leave airfare ticket expenses, the language training expenses, as well as the housing rental expenses and the children education expenses which incurred in China, so that all of those above the mentioned expenses can be treated as non-taxable benefits, regardless of whether the company paid those expenses to the third party directly or the individual seek reimbursement from the company. Under both of the situations, such expenses can be treated as a non-taxable benefit. So I think for the foreign nationals who work in China, this is the key updates for them, which is very relevant for their working in China. Yeah.
And it is looking like a more and more attractive regime, so thank you for that. Okay, I think that's brought us to the end of all of the questions, and I want to thank you both, Rebecca and Grace, for all of the comments that you've made today. It's been extremely insightful. If there are any other questions that anyone would like to raise, then please do come through to Louis or myself or Rebecca or Grace directly, and we'll pick them up separately. We will also send you a recording of the webinar and also the slide deck as well, so that you've got a note of that to refer back to if you'd like to. Our next webinar will be in 2 months' time, so thank you very much for listening, and look forward to presenting the next time.